for medical care. Medical care will get a lot cheaper once we get the government out of it. So once we get the government out of education, college tuitions are plunged. So we won't have to spend all this money on college. We won't have to spend all this money on health care. So we'll have the money available to do other things. It's only because the government is so involved that these things are so expensive. So there's a huge benefit that we get once we start dismantling government. As I said, I don't know exactly, but I would be surprised if it doesn't happen soon. I mean, 2013, 2014, maybe even this year.
Give it a day, time, please.
But I mean, you just don't know, and and a lot of it depends on foreign countries. How much rope are they going to give us? I mean, if foreigners decide that that's it, you don't know. The dollar can drop. The bottom fell out of Ireland or Greece very quickly. So I don't know. Look how quickly the real estate market imploded once it got going. When I was talking about the real estate bubble bursting for years, people say when. I don't know when. I think it's going to happen soon because I knew that as the Fed was raising interest rates, I knew eventually if they kept going up, eventually they'd get to levels where people couldn't afford these houses anymore. But I just don't know the exact date. But we just got to prepare for it in advance.
I wonder if you'd address the thinking that a lot of mainstream economists have that the real difficulty we have is in deflation, caused by deleveraging of all this debt and by the shrinking demographic
but that's part of the solution. We need deflation, right? You inflate a bubble, right? Real estate prices got too high. They need to come down. That's not coming down isn't the problem. That's part of the solution. But we don't want to deal with the problems of real estate prices coming down. But we need to, because trying to prop them up creates even bigger problems. We need to allow the market to function. We need assets to be priced correctly. And of course, when they're talking about deflation, they try to pretend, well, like prices are going to come down. That's not happening. Prices for things are going up. Prices for food are going up. Prices for oil are going up. There is never, they're not going to go down. I mean, they're trying to stop real estate prices from falling. But by trying to keep real estate prices from falling, they end up making these other prices go up even higher. That's what happens. So we have to accept the deflation. But there's too much of a political constituency leaning against it. And so the Fed wants inflation. Now, I think the Fed thinks they're going to thread this needle, that they're just going to create the perfect amount of inflation to inflate away just enough of the debt so that it's manageable. But it's not going to work. I mean, if they haven't noticed it, the one price that's not going up are wages. Wages keep falling, right? So how are people going to afford these expensive homes if their wages aren't going up? But they're not going to go up. And the problem is labor costs are rising, but that doesn't help the worker because the employers have to spend all that money on regulations and taxes. They don't have it to give to their employees. So it's not going to work. And of course, the Fed can't just pinpoint it exactly. They just can't have just the right amount of inflation. It's like okay, I'm just going to get a little bit pregnant. No, you're either pregnant or you're not, right? There's no a little bit. And of course, I mean, it's a good analogy because right now, you can hide your pregnancy for a while, right? I mean, you can wear baggy clothes, but eventually, if you're pregnant, people are going to figure it out, right? Well, right now the Fed is pretending that there's no inflation. Well, I mean, there is, and at some point, they're not going to be able to hide the inflation beneath all these government numbers because it's just going to be too obvious that it's there. And it's like, okay, well, what is the Fed going to do about it? What can they do about it? Raise rates. All right, well, then what's going to happen, right? Volcker had to bring interest rates up to 20%. Could we do that today? Oh my God, what would happen with the national debt, with all the mortgages out there, with all this stuff? So this is, the mother of all collapses that we are staring at. And anybody who thinks that the fiat system is some kind of massive success because they think we've escaped the problems of the 19th century, those are nothing compared to what we got now. the other reason is, you can take the position that I'm going to be 100% invested in gold. I'm only going to own gold. All right, that's a big bet on one thing. Maybe it's a winning bet, but it's all your eggs in one basket. My point is, look, have some gold, but don't have it all in gold, right? What if I'm wrong? Or what if I'm just way early? What is the harm in owning these foreign stocks? What is the harm in having the foreign dividends? So I think it makes sense to have some diversification. I think it makes sense to have income, other than just gold that's paying no income. So, but look, if you were telling me my choice is between all my money in treasuries and all my money in gold, I'd tell you to put all your money in gold. But you don't have to, it's not an all or nothing. You can have diversification. You can have other assets. And I think that, foreign stocks, the right stocks, in the right sectors, in the right currencies make a lot of sense.
But those foreign companies are only fiat currencies too. So
no, but they're not currencies. They're assets. They're plant and equipment. They're resources. They're income streams. Look, if you look at Germany went through hyperinflation, but German companies survived. If you own stock in Daimler-Benz, Daimler's still here. I mean, those things survive. So you can, it's the bondholders, it's the paper that gets wiped out. So I don't want my clients to be clipping coupons. I want them cashing dividend checks. But if you want to have some bonds in your portfolio to lessen the short-term volatility, we do that too. But we buy the best of the worst currencies. I don't think the dollar is the best house in a bad neighborhood. I think it's one of the worst houses in that bad neighborhood. And I think there's a lot better houses, and we buy those, and we keep the majority short, just so we have more liquidity and we can have less short-term volatility. Because what if there is another big dip in the market and you want to have some dry powder to take advantage of it? You would tap into some of your foreign bonds and buy stocks.
But even if you're successful, Peter, do you think that there'll be any chance of our government trying to balance the books, like grabbing our 401ks, the IRA?
Yeah, well, is it possible that I could make you a bunch of money and the government steals it from you? Yeah. But I mean, so you're going to be broke either way, right? So at least maybe if the government steals it, they'll leave you something, right? But if you're really worried about that, then you need to get your money offshore, right? But it's hard to do because nobody will take it. But you can keep all your gold with me in the Perth Mint, but it's hard to know exactly how bad it's going to be.
What if they take it? What if Australia takes it?
Well, look, then bury it in the ground. I don't know. You can have, at some point, you can't. You can be so paranoid about everything that you can't do anything. Oh yeah, absolutely. We're going back to it. The question is how. Do we do it on our terms or somebody else's? I think that we'll be dragged kicking and screaming back to it, but we will go back to it. When Nixon took us off the gold standard in 1971, he said it was temporary, and he was right. It was temporary. It's just a long period. We're going back.
So, a simple, true measure of inflation. I can go down and check on my local stores and add up all the prices and keep track month to month. But is there somebody else out there who's doing that for me?
Yeah, well, you can look at Shadow Stats. It's a website that keeps track of the inflation using the old methodology. And he's got inflation, I don't know, closer to 10% a year. But inflation is not prices going up. Inflation is money supply expanding. That's what's being inflated is the money supply. So just look at money supply, look at the price of gold. You can see there's inflation. And inflation isn't just prices going up. What if prices were supposed to go down? What if we became more efficient and prices were going to come down 5%? Because the government printed a bunch of money, they didn't go down 5%, they went up 2%. So is the inflation 2% or is it 7%? I'd say it's 7% because we got robbed of a 5% price reduction.
Hey, hang on one second. Guys, just a couple more questions.
Yeah.
We're going to finish up in 5 minutes. If you've got questions, we'll be in the back. People can answer them. You're also going to be signing some books.
That's right. I got to sign
for people that want to come out. So we'll take
more questions.